New York real estate is shifting underfoot. The numbers are moving, and the stakes are personal. Start with the simple, shocking part. Citywide, the number of homes for sale is up by more than 9% year over year. Not a trickle, a turn. In a handful of neighborhoods, that turn looks like a wave. Brighton Beach leads the surge, with inventory up nearly 49% in a single year. Flushing follows close behind with a 48% jump. Rego Park and Long Island City are climbing. In Brooklyn, Bushwick and Crown Heights are in the mix, along with Midwood, East Flatbush, and Sheepshead Bay. Even Manhattan strains against its own history of scarcity. The financial district is seeing one of the strongest gains in new listings anywhere in the city. This is the rare mix New Yorkers almost never get. More homes entering the market even as sales pick up. In December 2025, more homes entered contract than usual for the season, and new listings followed. Mortgage rates stabilized late last year, bringing buyers back into the hunt and pushing sellers off the sidelines. That's the short-term mechanics. The long-term truth still hangs over Manhattan. Supply has trailed population growth for more than a decade. But right now, in these pockets of the city, the experience of shopping for a home is different. Fewer panic decisions, less bidding war fatigue, in some cases, real room to negotiate. This is a straightforward change, but it sits inside a complicated moment. At the high end, the market is operating on a separate clock. In 2025, only 51% of homebuyers in the luxury market purchased a property to use as a primary residence. The rest were second homes, third homes, portfolio plays. The wealthy own more high-end properties in different parts of the world, and they're buying with a portfolio lens. Privacy and security dominate their decisions, even as U.S. home burglaries have fallen 62% over the past 3 decades. Spending on smart home security is projected to reach $39 billion by 2029. This isn't a contradiction. It's a signal buyers in that tier are optimizing for control. They are also optimizing for family. Nearly 1 in 5 purchases in the U.S. is now made by buyers who plan to live with relatives beyond their immediate family. That means guest houses, detached apartments, or adjoining units that can be combined into multi-generational space. In New York and Miami, the request is literal. 2 apartments with a shared wall, a plan to open them up, and multiple primary bedroom suites designed with private sitting rooms or small offices. The design tells a story. These are homes built for equals across generations. It changes what architects draw and what developers deliver. Still, the story of price and power is bigger than floor plans. Consider what happened far from Manhattan in December 2016. A single buyer wrote a $101.5 million check for a Coconut Grove compound on Biscayne Bay, 4.5 acres, waterfront. That deal hit $7,000 per square foot and reset the neighborhood. In the same month, 2 Palm Beach homes closed at $97.5 million and $66.1 million. 6 of December's 10 most expensive U.S. home sales were in coastal Florida. For $2,275 as a whole, Florida properties represented half of the 10 most expensive home sales in the country. And the pipeline shows energy. More showings with high-net-worth buyers, more off-market conversations, and buyers moving faster when an irreplaceable property appears. There is inbound interest from California and the Northeast. Each of those phrases translates into pressure on New York to keep its top-end competitive. And yet, New York is still New York. There is long-term confidence in the city. Sales velocity at the top end in 2025 was robust. Luxury apartment sales actually climbed after the election of Mayor Zohran Mamdani. One deal stands as an emblem, a West Village penthouse sold for $87.5 million, expected to close around 22/7 after construction finishes. If it lands on schedule, it's slated to set a record for Lower Manhattan. Corporate money is voting too. One of the giants is building a new office at $4 billion. That's not a whisper. That's a bet. So how do these pieces fit? The inventory surge in Brighton Beach and Flushing, the structure of the luxury tier, the Florida magnet, and the push and pull of policy in City Hall start with supply, because supply shapes behavior. When citywide inventory rises by more than 9% year over year, places that were short on options can suddenly feel liquid. Brighton Beach, with inventory up nearly 49%, shifts from scarcity to choice. Flushing, at 48%, does the same. In Rego Park and Long Island City, the signposts multiply on the same streets. Bushwick and Crown Heights, plus Midwood, East Flatbush and Sheepshead Bay, a search that would have been 2 listings wide becomes a dozen. In the financial district, the picture brightens in a part of Manhattan that's been waiting for its own turn. As listings multiply, sellers face a new set of incentives: price realistically and move quickly. Buyers slow down. They ask for concessions. They refuse to chase. That, by itself, can soothe the market. But the city is making another kind of noise. On the policy front, a senior official, the director of the city's office charged with protecting tenants, has argued publicly that rent control can directly challenge the logic of unfettered profit in real estate, weakening the speculative value of the asset. In that argument, the value of a rent-stabilized property is no longer based on what a landlord can get in the open market. It's grounded in a state public board deciding how much rent can go up. She also said that board is controlled by the real estate industry, even as she called for stronger regulation to go further. Whether you agree or not, those words matter when paired with the numbers above. They shape how investors and owners read risk and how developers imagine returns. Signals suggest some capital will test other shores when the rulebook feels unstable. Florida's December makes that point vivid. A $101.5 million purchase in Coconut Grove at $7,000 per square foot recalibrates expectations in an instant. When Palm Beach sees properties close at $97.5 million and $66.1 million in the same month, an axis shifts. If 6 of the 10 most expensive U.S. home sales in December land in coastal Florida, and in 2022, half of the year's top 10 sit in the Sunshine State, you don't need a heat map to see where risk-tolerant, privacy-hungry capital is comfortable. You can hear it in the way agents describe the momentum. More showings with high-net-worth buyers, more deals that never hit a listing service, and faster wiring when a property is truly irreplaceable. But a counterweight still anchors Manhattan. The $87.5 million West Village penthouse, expected to close around 2027, is not an outlier without context. It sits within a story of stricter return-to-office policies and what one expert called seismic investment in commercial real estate, including that $4 billion office project. It sits within the argument that New York is a place you never bet against. It also sits within a 2-tier market where homes priced at $10 million and above can outperform the broader sector. At that end, borrowers are less exposed to typical macro shocks. In the lower part of the luxury spectrum, buying decisions are more sensitive to net worth and the stock market. And beyond luxury, the headwinds can slow the middle. Leaders at a major listings platform have flagged the likelihood of a slow year for U.S. weak. Housing. Put simply, it's a bifurcation. The front of the plane fills up. Economy waits. If you zoom back into the street-level experience, the story of the inventory surge becomes human. In Queens, Flushing's 48% jump in listings has the feeling of a neighborhood throwing open its doors. In Rego Park and Long Island City, buyers who spent 2 years dialing brokers for pocket listings can scroll through pages of choices. In Brooklyn, Brighton Beach's nearly 49% leap hits a neighborhood known for slim pickings. Now it reads like a chance for entry. In Bushwick and Crown Heights, in Midwood, East Flatbush, and Sheepshead Bay, the rhythm of open houses changes. In Lower Manhattan's financial district, the new listing pulse rises. More choices flush out the floor price. Bidding wars cool, buyers ask for credits. Sellers face the new math of days on market in a city that doesn't often allow for second chances. Policy debate hums alongside this reality, and its language is not shy. Rent stabilization and rent control are described by one of the city's own tenant advocates as tools to strike at the speculative value of real estate and as the first step in a broader push towards social housing. In that framing, a state public board decides how much rent increases, not the landlord. The intention is explicit: weaken the entire real estate industry at once through a strong rent control campaign, and strengthen leverage to build social housing. Even where the board is described as being controlled by the industry, the aim is clear: to regulate the flow of returns. It's a fundamental reframing of housing from wealth building to utility. These aren't small ideas. They run straight through design choices in luxury towers and everyday negotiations in rent-stabilized walk-ups. They shape how a multi-generational buyer in the West Village decides whether to merge two apartments. They shape how a small owner in Crown Heights reads the next decade. They shape how a developer weighs the decision to break ground in the financial district when inventory is rising fast right now, but the long-term shortage still argues for building over time. They shape how an ultra-high net worth family evaluates New York against an option on Biscayne Bay or a new enclave opening overseas. Because even the global competition is changing. An hour north of Riyadh, the sand gives way to Kuzam, a more than 100 billion rial project, about $27 billion, unfolding as a new metropolis. Thousands of newly built single-family homes, streets that could pass for an American suburb. The point is not that Manhattan and Kuzam are interchangeable. It's that the menu is expanding for investors and buyers. A nation can open its property market and invite the world in, signaling its desire to attract foreign capital while tackling its own affordability challenges. That move pulls on global attention the way a record-setting penthouse does. Signals suggest that capital, which once cycled through a handful of cities, now tastes a broader field. Bring this back to the sidewalk. The family touring a two-bedroom in Rego Park next Saturday will feel only one thing. There are more options than last year. The couple chasing a three-bedroom in Brighton Beach will feel another. For the first time in a long time, they are not the only offer on the table. In Flushing, in Long Island City, the expanded inventory shifts how far a budget can stretch. In the financial district, increased listings meet a skyline with a $4 billion office rising and an $87.5 million penthouse in the pipeline. Across the river in Brooklyn, in Bushwick, Crown Heights, Midwood, East Flatbush, and Sheepshead Bay, agents adjust pricing strategy in real time. At the top of the market, the calculus stays blunt. If the West Village can sell a record setter for $80 to $7.5 million and target a close around 2027, the air is clear at altitude. Privacy and security still rank first, even in a world where U.S. burglaries have fallen 68% over 3 decades. The spending arc toward $39 billion on smart home security by 29.m shows the behavior isn't about statistics. It's about perception and preference. The multi-generational trend, nearly 1 in 5 purchases oriented toward extended family, means New York's luxury inventory gets remixed. More dual primary suites, more private offices within bedrooms, more combinations of adjoining apartments. Developers respond, architects redraw, and buyers who can act move quickly, often before a listing goes public. Outside the city, Florida keeps setting the pace in the glare. In December 2027, 6 of the 10 most expensive U.S. home sales happened in coastal Florida cities. $101.5 million in Coconut Grove, $97.5 million in Palm Beach, 60 AAO again in Palm Beach. In 2010-95 as a whole, Florida represented half of the 10 most expensive sales in the country. Those are not quiet numbers. Paired with a stream of interest from California and the Northeast, they suggest that New York has real competition for high-end capital. They also suggest that markets punishing hesitation will reward clarity. Buyers are moving faster when a one-of-one property appears. At the mid-market, clarity is thinner. Leaders at a major listings platform are expecting a slow year for U.S. housing. It fits the two-tier pattern. Agents selling homes priced at $10 million and above are the most optimistic. The middle of the market looks murkier. At the very top, buyers are less exposed to macroeconomic shocks. At the lower end of luxury, buyers live closer to their portfolio balances and the daily move of the stock market. If you need a metaphor, consider the airline that reprograms its planes to add more premium seats. The front of the plane fills. The rest waits for a better fare. So what comes next? For the buyer in Queens, the seller in Brooklyn, the developer in Manhattan, the asset manager calling Florida, and the policymaker at City Hall. Start with what just happened. Citywide inventory is up by more than 9% year over year. Brighton Beach is up nearly 40 to 9%. Flushing is up 48%. Rego Park, Long Island City, Bushwick, Crown Heights, Midwood, East Flatbush, Sheepshead Bay, rising. The financial district rising, December 2025, saw more homes enter contract than usual for the season, and new listings followed. Mortgage rates stabilized late last year, and the market exhaled. For buyers, that means more time and fewer bidding wars. For sellers, it means the clock sped up. Against that backdrop, policy is not a spectator sport. When a city official says out loud that rent stabilization and rent control are instruments to weaken the speculative value of real estate and re-anchor it to a public board's decisions on rent increases, investors listen. When the same official frames that strategy as a way to strike a blow to the industry as a whole and strengthen a push for social housing, they do more than listen. They price it. Signals suggest it will influence where and how certain investors deploy capital in 2026 and 2027. Not in a panic, in a recalibration. And yet, the gravity of New York, the $87.5 million West Village deal aiming for a 2027 close, the $4 billion corporate headquarters climbing into the sky, the resilience of luxury sales after the election should not be underestimated. There is long-term confidence baked in. The city that once forced buyers to sprint is, for a moment, letting them shop at a normal pace. That doesn't end the shortage. It just shifts it in time. Look ahead. The base case through December 2026 is a two-speed market. In specific neighborhoods, Brighton Beach, Flushing, Rego Park, Long Island City, Bushwick, Crown Heights, Midwood, East Flatbush, Sheepshead Bay, and the Financial District, inventory stays elevated relative to a year earlier, and buyers find more leverage. Citywide, the long-run shortage persists, especially in Manhattan, making these windows of choice temporary. At the top end, deals continue, buoyed by long-term confidence, ongoing corporate investment, and a design shift toward multi-generational layouts. Expect more combinations, more dual primary suites, and more sales that aim for records. The $87.5 million benchmark in the West Village sets a tone. Watch two things with discipline. First, policy. If the rent control campaign intensifies along the lines articulated by the city's tenant chief, explicitly aiming to weaken the speculative value of real estate by shifting pricing power to a state board, signals suggest it could cool investment appetite in certain segments of the rental stock and slow some development decisions through late 2026. If that push softens, the adjustment could be milder, maintaining confidence in projects that meet the city's long-run shortage. Second, competition for capital. Florida set 6 of December's 10 top sales and claimed half of the top 10 for 2025. If that pace holds and the stream of interest from the Northeast keeps flowing, high-end capital may continue to split time and dollars between Manhattan and Miami through 2026. Add a third global variable at the edge. Large-scale openings like the $27 billion Kuzam project north of Riyadh, which signal an expanding geography for investment. Each of these watch items touches New York by tugging at the price of risk. For everyone else, stay close to the numbers that matter. More than 9% inventory growth across the city. Nearly 49% higher inventory in Brighton Beach. A 48% jump in Flushing. A West Village marker at $87.5 million aiming for a 2027 close. A $4 billion tower rising on the corporate side. A $101.5 million trade in Coconut Grove at $7,000 per square foot. $97.5 million and $66.1 million closings in Palm Beach. 6 out of 10 top December sales in Florida. Half of 2025's top 10 by price anchored there. Nearly 1 in 5 buyers planning for multi-generational living. U.S. burglaries down 67% across 3 decades, yet security spending projected to $39 billion by 2029. Those are the coordinates. New York's housing market rarely gives you a clear view ahead. Today, it offers something else. Options. In some corners, more than you have seen in years. In others, the same old scarcity, wearing a new suit. The city is living a 2-tier story, and the numbers are telling it plainly. If you read them carefully, they point to a simple plan. Shop when the shelves are full. Move quickly when the right thing appears. Price realistically when the competition crowds your street. And keep one eye on the policies that will decide what the next decade feels like. If you value grounded, numbers-first storytelling about where New York real estate is headed, stay with us for the next deep dive.